Hello and welcome to New Wave Global. And today I am joined by Yousaf Nazar, who is a reputed banker, economist, and looks at not just issues related to Pakistan and South Asia, but has a good understanding of global finance and how money markets, flow of capital, etc., takes place. And I wanted his views for today on Pakistan's growing indebtedness, in particular with relation to the Chinese loans that were raised nearly uh, since a decade ago. They've been increasing. And now almost 30% of Pakistan's foreign debt, of which has crossed nearly over $250 billion. Of that, 30% is owed to China. The rest is owed to the Paris Club, what is known as the Western countries, the multilateral institutions, etc. How far is this a problem? And how far is Pakistan going to get further mired into this trap of debt? And in particular, is Pakistan headed the way, the way Sri Lanka, parts of Africa, and Latin America are moving vis-a-vis Chinese indebtedness? This is something I wanted to explore. Thank you, Yousaf Saab, for joining me this evening. And so, can you please tell us how how much of a serious issue is this with regard to China?
Thank you. As you said, Pakistan's total debt is about 100 and external debt is $106 billion. I'm talking about just the government debt, not the private sector debt.
Right.
But the issue is that a lot of that is coming, due shortly because of old legacy debt as well as Chinese debt when it started under the CPEC program, the China-Pakistan Economic Corridor. The total projects under CPEC, although various numbers are thrown, but the projects that went into action, many of them have been completed. Some are still under under completion. The total amount was about $21 billion. The problem was that of the $21 billion, the project, about 16 billion was basically in the form of loans. And those loans have to be repaid, unlike the loans to the World Bank or the, or Asian Development Bank, which are typically can go into 20 or 30 years. These loans have to be repaid in a matter of like 10 years. And they were borrowed at commercial rates of interest, which means, 4.5% above the LIBOR. But what is special about some of these loans are that they were in a big chunk of these projects were in the energy sector, more specifically the power plants.
Right.
And very high rates of return were guaranteed in terms of return on equity, as
Correct.
high as ranging from 27 to 34%. So not only those loans have to be repaid, the government also has to make capacity payments.
Right.
Because these power plants were constructed under the take or pay, sort of agreements. That means even if you cannot buy the whole electricity that is being produced by the power plant, you still have to pay for it.
Correct.
And as a total, to give you an idea, they crossed about 2 trillion rupees.
Right.
That level, which is in dollar terms is $7.5 billion.
Okay.
Now, if you put it in the context of the economy, the capacity payments alone represent about 2% of the GDP.
Right.
And Pakistan's tax to GDP ratio is barely 9%.
Right.
So you can imagine the strain that has put on the government finances.
Indeed. Indeed.
It
And
is it is a huge amount for a small economy like Pakistan to absorb. And
correct.
clearly it has not, and therefore, within in the last 5 years, we have gone to the IMF 3 times.
Hmm.
2019, last year again we went under a standby arrangement. Now again we have a extended fund facility for $7 billion.
Right.
So it has put Pakistan in a very, very tight, very difficult situation. What has compounded the problem that Pakistan's export base is barely $30 billion.
Right.
Now, if you have to make your financing requirement, external financing requirement is like 20 or $24 billion, and your exports are just $30 billion.
Hmm.
That is a very, very difficult position to be in. Pakistan last year was held by the fact that Pakistan's remittances touched nearly $30 billion.
Right.
So that has been the saving grace to some extent. But even then, the burden is so high on the government's deficit and the fiscal position that the government has, even all the debt service payments, they are exceeding what are the net revenues of the federal government are. Last year, the debt service payments, interest on debt, if I remember correctly, they represented 121% of the net federal government revenues.
Right. Right.
Basically, to repay the loans, we have to borrow more.
Unfortunately, yes.
And as the credit rating and our standing goes down, the cost of borrowing goes up.
Correct.
That is a very simple principle. So our cost of borrowing has been going up. The debt service obligations have been going up. Our exports have not grown as much. And the government's tax situation is really bad.
Correct.
Therefore, and it is been compounded by the fact that the government acts only when it is, it comes under very strong pressure from the IMF. For example, take the recent case of the provinces being asked to, raise revenues from agriculture. I mean, this has been an issue for Pakistan since ages, for decades.
Mm-hmm.
But only now the governments seem to be acting only because they are being forced by the IMF to do something about it.
Right.
Of course, IMF has been complicit. It let Pakistan get away with all these things. That's a topic by itself. Why did it happen? But the fact of the matter is that Pakistan on its own, the Pakistan's governments have been very complacent because they thought they could get away with that. So nearly half of the economy, agriculture and also the retail and wholesale trade, which is together is about 50% of the economy, they have been completely sheltered from tax, and they have become really tax shelters. A lot of the people, I'm sure you know, and I also know, they declare some of their regular income as income from agriculture. And since these are very influential and powerful people, nothing is done about it.
Correct.
So
Correct.
all these factors have gotten to the point that Pakistan today finds itself in the situation that it is now, that
It's
I mean,
borrowing.
normally
It's
people would say, well, our external debt to GDP is not that, high as in some other countries. True. But then look at our earnings. They're very poor.
right.
Compared to the GDP of $375 billion, our exports are like what, $30 billion. That's very low, compared to
Yeah.
most standards
So
of Asian countries. So we
yeah,
don't earn that much. We consume a lot. Over 90% of our economy is consumption, consumption, and consumption. And we keep borrowing it to sustain that consumption. And look at the size of just the federal government. Federal government has, excluding the armed forces, has over 600,000 people in a country where supposedly most of the functions have been devolved to the provinces.
right.
So
Right.
we spend just on like $14 billion on federal government.
So, Yusuf Saab, I just want to going back to this debt trap because now we are borrowing more to pay the old debt. Half of this year's budget is dedicated to debt servicing, a little more than half. I mean, which is really crazy for any country. I mean, let alone Pakistan or whoever. But uh, Yusuf Saab, I want to get back to the issue of China. So, I mean, why did Pakistan negotiate these loans at such high rates? I mean, 27%, 25%. I mean, this is really, really high, even by the, I mean, you've been a banker all your life. I don't know what, so what rates were you giving to your clients when they came to raise capital? But isn't that like something that was not done in a proper, with proper economic planning? Instead, some other factors were at work, either political or strategic. So that's what I want you to highlight.
Yeah, I mean, let's look at some projects, specifically. For example, Multan, Sakkar to Multan highway, motorway.
Yes,
Now, I'm not against, building roads and motorways. By all means, do it. But when you are already so much indebted, don't do it by foreign currency loans. And the cost of this Sakkar Multan highway was $2.9 billion.
right.
Okay, the problem was that the 90% of this project was financed by foreign currency loans from China.
Yeah,
Not
exactly.
just that, that also the high motorway was built by a Chinese company.
Correct. Correct.
Take, for example, Orange Line in Lahore. The initial project cost was about $1.6 billion.
Right.
90% of which was, financed through foreign currency loans.
Right.
So if you put an industry in an export processing zone, you borrow, and you plan that you will repay, through export earnings. No, that makes sense. But building roads for which there is no direct connection with export earnings, does it make sense?
Yeah. I mean, I'm baffled. I
And
mean,
this is nothing short of a huge scandal. Then another, infrastructure project, which was Havelian to Thakur, it was called KKH. It was $1.3 billion cost. 90% of that was financed through, Chinese foreign currency loans. So
right.
this sort of, irresponsible kind of projects which had no immediate payout, I'm happy if you say, okay, we are putting in, this software company or some engineering company or even maybe a textile mill that will earn so much over the next 5 years, 10 years through export earnings, and therefore foreign currency loan is justified. But how
Hmm.
can you justify some extravagant spending, and that too was colored by the political interests of then ruling party? I mean, so much was made of this, orange line in metro, and there was a lot of debate on it. Yeah, okay, you can debate, whether it should have an orange line or underground line or whatever. Yeah, clearly, our cities need transport, but to borrow, over $1.5 billion just to provide this sort of transportation in one city, which happens to be the power base of the Sharif family, that raises a lot of serious questions. So, and similarly, the energy projects, if you look at, and I gave you examples, and you ask whether this is justified. I mean, 34% return on equity means that the payback period for the equity investor is less than 3 years, right?
You're right.
I mean, where in the world you get, such great projects that they repay in 2, 3 years?
Yeah,
I
it's
mean,
really
this appears
unheard
to
of.
me more like great free lunch at a very little cost and very high risks to the people and to the country.
You're right. Right.
So it appears that there was, at a minimum, I would say there was not much, thinking behind it, not much planning. The only consideration was that to just to gain popularity, make some political capital, so that they can say that, oh, look, we have ended the load shedding, and and orange line buses are going around, but at what cost?
At what cost? Yeah. Yeah.
At a huge cost to the Pakistan's economy, and by burdening it under so much debt that we really now don't know how to get out of this debt trap.
So will China reschedule some of this debt? Do you think? I mean, they have delayed the repayments. I think because recent high level parleys between the government of Pakistan and the Chinese authorities. But you've also been talking about rescheduling of debt. So if we were to maybe reschedule Pakistan's debt as a whole, I mean, with the Paris Club or the World Bank and other institutions, and also with China, but do you think that the Chinese authorities are going to reschedule this debt?
Well, it's a tough call because Chinese typically, they have not shown, much aptitude or inclination to reschedule debts, but they have done it, you know, uh, and increasingly there is a lot of pressure, because the countries who borrowed from China, they have come under a lot of stress, like as you said, China, Ghana, and Sri Lanka as well. So there has been, some progress. I won't say those problems or restructuring arrangements have been, completely successful or completed. But at least these countries have been trying to do that. Some of these countries, like Sri Lanka.
Right.
But we basically have requested, I think, rather quietly to the Chinese, please do something about it. And now, more recently, I think the latest initiative from the government of Pakistan, it appears that they have come under some sort of pressure from the IMF that you should do something about it, because obviously China is the single largest bilateral creditor for Pakistan, and it's the debts owed to China. They are bigger than what we owe to the World Bank, for example.
Right. Right.
So
So
naturally, if you talk about the restructuring to the Western creditors, naturally they would say, "What about China? That is your biggest creditor." So we kind of squeeze between the two, because who bites the bullet first? It is a tough
exactly.
situation to be in.
It is very tough, Yusuf Saab, but let's see what happens. But in any case, thank you so much for joining us and giving us the time. And let's, reconnect later in a couple of weeks and see what happens on this front. For now, thank you and goodbye, viewers. We'll be back with more information for you.
Thank you.